You're very welcome to another episode of the Scaling Your Business podcast. For this episode, we're joined by Tanner O'Connell, the Investment and Finance Director at Elkstone Capital. Tanner, you're very welcome to the show.
Rian, thank you very much for inviting me on.
Chuffed to have you. Spoke beforehand a little bit about venture capital, investments, finance, and that's kind of the main focus of this podcast. But I'd like to get to know you a little more as we go through this journey over the next 35 minutes. So you grew up in Dublin. Any favorite standout memories of growing up in Dublin, your childhood in Dublin specifically?
Yes, so I grew up in the countryside on the Meath, North County Dublin border. Grew up on a farm. Dad was a pilot. And I suppose that's something that probably had an influence on me growing up, in that my mum was self-employed, spent a lot of time with her as Dad would have been away a lot. And that's something that definitely instilled an early interest in business of all sorts, and would have definitely molded what I've gone on to do subsequently. I went to an all-Irish primary school in Ashburn. Again, something that probably has molded my approach to things subsequently. I think that's a really good thing for people to do if they're interested in it, because it gives you an early opportunity to learn a different language. And I was big involved in the GA, and I'm still very interested in it, which gave me a kind of an early start there as well.
Your parents still based out in Ashburn?
Not anymore, no. I still have a lot of friends out there and would keep in touch with them, but they are based in Malahide now. So they made the move from the countryside to a more urban area.
And does your dad still fly that plane?
No, he's retired about 14 or 15 years ago. And it's funny, a lot of people think that when your dad's a pilot, it's something that you would be interested in yourself. But for me, it was always going down the business route in one sense or another.
And why had you chosen, because a lot of people look up to their father, what was it that influenced you to go down that business route from an early age?
Yeah, I think, as I say, my mum's always been self-employed, and then I'm by far the youngest of my family. My sister is 14 years older than me, and my brother is 10 years older than me. And my brother Blair went down the kind of business and accounting route prior to me, so he would have been someone who I definitely would have looked up to. So yeah, that was probably what kind of the early drivers were.
You mentioned Irish school. Any standout people throughout your childhood, either in school? You mentioned your brother that you think had a big impact or influence on the person you are today.
Yeah, the Irish school, I have very fond memories of the Irish school, and growing up in the countryside. Generally would have had a lot of friends over after school, and but in terms of the early drivers, it's a difficult one, because I'd say family was a big part of our life growing up, and extended family, and having people over to the house and that. So I just probably look back as overall having a very open, happy childhood.
Nice. Strangely, you mentioned this school. I was actually over in Ashburn this morning. I'm usually over in Ashburn every single morning for the gym, because that's where my gym is. You chose accounting. Well, actually, you did. If I have this correct, you did junior cert in Clongowes, leaving cert in the institute. Then you went to UCD to do BCom, and then you did a master's in accounting. What was it that had you stay at UCD for that extra year to do a master's in accounting? Who was it? Your brother that influenced that decision, or what was it? Was it a certain modules in BCom? And maybe you can explain what BCom is for those listeners who might not be familiar with that course.
Yes, so BCom is a commerce degree, so a very broad business degree that I think, if I was to be advising other people, or in terms of my own situation, it's a great course to do if you're interested in business, but you're not exactly sure what area, whether it be accounting or whether it be finance. So that was my rationale in doing the BCom. In terms of going on to do the extra year, as you said, in Smurfit, again, it's something I get asked about quite a lot. What I'd say is that really and truly, it doesn't matter whether you do it or whether you don't. it's almost a lifestyle choice as to whether you want to do another year in college or whether you feel, no, I'd really like to get stuck into the real world or your career. For me, there was a decent group of people moving from commerce on to do the masters, and that was really the primary driver for me making that decision.
Okay, so there was a bunch of college friends that were decided to make that leap, and you were joining them in that journey.
That, and by doing the masters, it actually means that you have to do one set less of your professional accountancy exams when you join your firm. So by choosing, let's call it the necessary subjects in commerce, that got me exempt from the first set of accounting exams. The masters got me an exemption for the second set of accounting exams, and then you do your third and final set while you're in your training contract. So it means that while you're actually doing your training contract, which I went on to do with KPMG, you can get more stuck into the work as you've one set less of exams to do.
And you're making yourself somewhat more attractive to the firms because you've already got that extra step on the ladder.
To be honest, I would say that they don't really mind either way. They probably like a blend of both types of candidates coming in.
So a couple of things I know about you before we get into all the good stuff. You're a member of Clontarf GAA Club. You've been to places like Chicago, Croatia, Wales, London. What do you like to do outside of work that not a lot of people would know?
Yeah, you've certainly done your homework, Rian. So outside work, work's probably a big component of my life, both from a time perspective and something that's very important to me and that I really like to put a lot of emphasis and effort into. It's not a kind of a 9 to 5. It's definitely not a work to live. But yeah, outside of work, very passionate about sport. As you said, play for Clontarf. Got to know a group of guys who were playing with Clontarf when I was in the institute, actually, which is about 13 years ago at this stage, and just formed a good kind of a friendship group there. Other than that, just generally interested in sport, try to play a bit of golf as well. And yeah, they're probably the main things that outside of work take up a lot of time.
Have you got a favorite sport? Is GAA your favorite sport?
Yeah, I'd say, yeah, definitely favorite sport. And as I think I mentioned earlier, big Meath GAA fan, particularly having grown up on the Meath North County Dublin border. It would have been during the days when there was actually a big rivalry and there was competition between the two counties, which hopefully we can see returning sooner rather than later.
I was just going to say, do you ever think you'll get to wear a green and gold jersey in Croke Park on the All-Ireland final day ever again?
I hope so, Rian, but I think it's a good number of years away at this stage, unfortunately.
Yeah, well, they had a good run in the late 90s. I'm from Ratoath, which is like literally next door to Ashburn. You can almost see Ashburn from where I'm sitting. But I'm a Kilkenny fan. Both my parents are from Kilkenny, so I've had plenty of experience at Croke Park wearing a black and amber. Okay, so let's jump into all good things, investment, finance. When people are going to think about investing, what are some of the things you think they should pay attention to and watch out for if they want to take that step in investing?
So is this for people, Rian, who are starting investing for the first time?
Yeah. Well, let's start there and then let's move on to the other side of that coin.
Yeah, okay. I think the first thing, Rian, is for people to try and educate themselves as much as possible. So there's an awful lot of good resources online just for generally understanding what you're getting into, the same way you'd approach taking up anything, taking up a new sport, or understand the ground rules, understand optionality. And then I would say the next step is to start small, first of all, and to from there kind of add to your investments over time. So whether it's you're going to allocate €100 a month and put that to work into various investments. But I think the first step is definitely educate yourself.
So why might someone decide to go down the route of investing rather than put it in a long-term AIB or Bank of Ireland savings account. Well, like that's just one of the examples. What are some of the advantages of investing?
Yeah, well, at the moment, given the current interest rate environment, by putting your money into a deposit account, you're going to be earning next to nothing, if not having the bank actually charge you for the pleasure of minding your money. So if you can generate any kind of an investment return at all, really, you'll be in a better position than if you just leave it sitting there in cash. Secondly, given the amount of quantitative easing, i.e. printing money that's happening, particularly in the States at the moment, we probably are in an environment where there is a risk of inflation, which again will further devalue people who just hold all their funds or their savings in cash.
So there's a lot of, particularly, I feel like you're on the same age as me looking at your LinkedIn. There's a lot of hype or talk around apps like Robinhood, Revolut, and people make, I don't know whether it's for fun, but small investments in stocks online. And some people might feel pressured into joining in the crowd in doing so, because a lot of people only share the positive news online. But there's places like the Zurich Dynamic Fund. I'm just mentioning that because that's where I put money in each month. But if I was to get started, are there any because there's a lot of noise. There's friends on social media. There's different accounts, and it's hard to trust which ones to listen to and which ones not to listen to. So, like from your perspective, if you could point a couple of places for people to go to get educated in this before they decide to do anything, where would you direct them towards?
Yeah, I suppose in terms of the first point that you've mentioned, Irene, there's probably two different aspects to the way of looking at investments in this regard. So like active investments, whereby you're picking out individual stocks or securities and investing in them. You'll hear a lot about that in terms of, as you've mentioned, Robinhood. But then there's passive investing, where you can essentially invest in an ETF or a fund that tracks one of the various exchanges. So that's probably, let's call it maybe the safer or the more way to start off. And for somebody maybe who wants to invest more so because they know it is going to be very good for their financial well-being and health going forwards, that's probably the option. For people who have a burning desire to really learn a lot more about investing and various companies, going the active route is probably something that's going to appeal to them more.
What I'm conscious of this is I'm trying not to get too technical or overloaded. I'm trying to keep it simple for listeners here, while also providing value. On this topic, I'm no expert on this topic, so it's rather difficult to do that. But if we look at the latter you just mentioned, so as I talked about Zurich Dynamic Fund, before we move on to other topics, I'd like you to kind of help break this down for the listeners. If someone was to invest, let's say, €1,000 into an AIB or Bank of Ireland's current account, and they were to also invest €1,000 into one of those dynamic funds, I can't remember the term you used, over time, what I'm hearing you're saying is that you're almost losing money by putting it in the current account, long-term savings account with one of the traditional banks. Whereas if you put it into one of these dynamic funds, it's going to grow. But like, I understand this, but help the listeners understand, like, how is that? Like, if I give €1,000 to one of these organizations like Zurich or Standard Life, are they going to act on my behalf and invest in a lot of different companies, and then each year give me, 5-6% back on the investment that I made if I make on a, and then I have a second question to that is like, is it better to, at the end of the year, take any savings I have, let's say it's 10,000, 50,000, 100,000, and dump it in, or am I better off to spread that 2,000 one month, 2,000 the next month, 2,000 the next month? And if so, why am I better off spreading, or why am I better off dumping all in one go?
I better be careful here, Rian, that I'm not seen to be giving any financial advice. But
Okay.
no, so I understand where you're coming from. If you want to look at it, very big picture from a kind of a helicopter view, if you took, for instance, and these are just general, broadly accurate figures I'm using, if you took the, one of the big American stock exchanges if you took it over 100-year period, for somewhere around 7 to 8 out of those decades, no matter when you've invested, you will end up, as in your investment will grow. So even if you invest at what might be an unfortunate time, that if you continue to invest periodically, like as I said, €100 a month or whatever it might be, that in the long run, you will generate very substantial returns or very meaningful returns. So it's kind of, the basic premise is that like economies grow, particularly things like technology as real drivers, and then over time you will benefit from that. And if you're fortunate enough to get in at the wrong time, over the course of time, that will kind of fix itself.
Here's where you might be able to help without pushing any of your buttons is the typical audience that listens to this are entrepreneurs, founders, CEOs, MDs of small and medium-sized companies across the UK and Ireland. If they were interested in learning more, is Elkstone Capital, like, do you guys run webinars? Are there articles, resources on your site where someone could go to learn more or explore? Or like, other than this podcast, if I'm now interested in going, oh yeah, I'm putting my money there, but I might want to explore the option of doing A, B, or C. Like other than this podcast, where is the best place for them to, or where's one place they should go to take a look?
Yeah, so Elkstone wouldn't really be financial advisors in the sense that you're talking about. There's a lot. I probably don't have any one specific one that I'd be comfortable or would really steer people towards, but there is a lot of resources out there that can be very helpful. Things like my Wall Street will be a good example of one. It's a startup that's done exceptionally well over time, and it is very much it focuses on the educational piece. There's a subscription, I think it might be, I'm not entirely sure, maybe somewhere between $200 and $500 per annum to sign up to it, and it's very good in fairness.
Okay. Well, moving on, venture capital is something that I'd like you to break down and kind of make simple. So first of all, for anyone who's not sure what it is, can you define what it is, venture capital?
Yep. So venture capital is investing in early stage tech startups.
Okay, so there's a venture capitalist who has had a successful run and now is, on maybe one or two companies cashed out at 150 million euro, and now they've got a pile of money and they're kind of early stage investors and they're called a venture capitalist.
Yep, that's broadly correct. Yeah.
Okay, cool. No, I'm just trying to make this simple so that people can understand these terms, because sometimes people don't understand these terms. Why might early stage company, and if I'm correct, it's not usually the very early stages, is kind of if I'm correct, from what I understand of venture capitalists, is they don't invest at the very beginning. It's a little while afterwards, and I could be wrong. You could correct me on that. But why might a company look at the option of venture capital?
Yeah, so in investing in venture as a kind of, let's call it as an asset class, to differentiate versus a venture capitalist, because I could invest or you could invest in venture as an asset class by giving a very small amount of money to a company, and that can be anywhere from an idea on a piece of paper to a much later stage, let's call it Series D investment, where a company might be raising $200 million. It's still all investing in venture. So let's just say, even if we were to look at Elkstone and what we do, we would typically invest between, let's call it €500,000, maybe up to 2.5 million. Typically, that's how we have done more in certain deals, and that money would go into an early stage tech company that could be Irish, could be international. We'd be very much sector agnostic in terms of what specific area of tech we'd invest in.
And what do you mean by that? Do you want to explain that for anyone who doesn't understand? You're what you're saying is you're not biased in what sector you invest in?
Yeah, like as in, we could invest in health tech, ed tech, prop tech. We're not specialists, but that's
Gotcha.
that's almost, Rian, a virtue of the fact that we invest on the earlier stage. We're not writing the 50 million tickets at the later stage of the venture cycle. And those venture capitalists would tend to be more specialists just by virtue of the fact that they're putting a lot more money into these investments. Whereas for us, being generalists and sector agnostic is helpful in that, because you're going in at the earlier stage, it's more risky, and therefore being diversified across lots of different kind of, let's call them, sub-sectors of startups is actually beneficial for both us and our clients.
So if I might not be understanding this correctly, but you've got a number of investors that invest with you, and then you act on behalf and invest in companies. Is that what I'm understanding?
Yeah, so it might be helpful for me to give you an overview of Elkstone, Rian.
Please do.
So Elkstone is a multifamily office based here in Dublin, in Ireland. What's a multifamily office? We mind lots of high net worth families and entrepreneurs, and our business is basically broken down into three main areas. One being venture, which we've kind of discussed, two being real estate, and three being our family office service, where we will provide bespoke services to our particularly high net worth families and individuals. So if you take it in reverse order, the third piece is really minding people and kind of assisting them around some of the things you've discussed earlier about, where should they look at putting their money, bringing them interesting opportunities that might not be originated in Elkstone. So they're not, let's call them Elkstone deals. Whereas if you go back up to venture and real estate, we originate our own deals. So we go out there, or people come to us, and we decide we're going to invest in ABC tech company. We will then invest our, and when I say our, I mean the Elkstone founders funds, but then we will also bring those deals to our clients and give them the option to invest in them as well.
Okay, so why might people come towards, why might a tech company in Ireland or the UK come to you and look for investment?
Specifically to Elkstone?
Yeah.
I suppose if you look at the track record of some of the companies we've invested in previously, the likes of Let's Get Checked and 30 Madison, which have both recently achieved unicorn status, i.e. valuations in excess of $1 billion. Other notable ones, Flipdish, Mana, Soapbox Labs. So people have seen the successes thus far of the companies we've invested in, and some of the doors that we've been able to open. Ordinarily, we will put somebody on the board of these companies to act as kind of non-executive director and assist them, which is particularly valuable at the earlier stage, when we're very early stage investors. As a company like Let's Get Checked has gone through subsequent funding rounds. Not to say that we can't add value, but they have then lots of people who will be able to add value for them. Whereas if you're the first investor at, let's say, the seed stage, by having, a professional venture investor on your board is very helpful.
So not only do you have, let's use a black book of good contacts that you're able to bridge that relationship, you're also using the funding as a way to kind of help them boost or like achieve that hyper growth unicorn status.
I suppose that it probably links to the question I think you were asking me earlier as well, like why would somebody take on venture money? It's exactly as you've said there. It helps grow the business rapidly, particularly for a tech type company. It's very, very difficult to bootstrap it. You might be able to do it for a period of time by taking on, investing your own money, friends and family money, maybe angel investors in the sense that they're not professional investors. That'll get you so far, but a point will come whereby really to ramp up to the next level, in the vast majority of cases, taking on venture money will be the way to unlock that potential.
Yeah, I got you. Any mentors yourself, ways that you continue to improve your craft? You listen to podcasts, books, as I said, anyone, groups you go to, mentors you invest in?
Yeah, in terms of mentors, that's something that I've always had, to be honest, right back to, I'd say, certainly my commerce days, if not earlier, where they might be people from very, very different backgrounds, but just people who I would pick up the phone to or ask to meet for a coffee and say, look, here's where I am. Here's the decision I want to make or I'm thinking of making. What do you think? And it's something I've definitely got a lot of benefit out of, particularly in terms of, let's say, during the period when I had I'd done my 3 years with KPMG and I was deciding what step I wanted to take next. There were kind of various people I met who were just very helpful. I've been able to distill down and help me figure out what it was that I wanted to do and then how I would go about making that happen.
So not something that people should overlook.
Like invaluable would be the way I'd put it.
And is networking an important layer of that so you can continue to build your contacts?
Yeah, I think they go hand in hand because the more networking you do, the wider your network, the better chance there is that no matter what you're looking for advice about or what obstacles maybe you have in front of me, it's more likely you're going to know somebody who's going to be able to help you with that particular problem or give you good sound advice.
In the industry that you're in, you can do this industry specific or role specific. What are some of the challenges that you've faced over the last 18 to 24 months that you didn't think that you end up facing? And how have you tackled them?
Yeah, I think the last 18 months, Rian, for everybody, irrespective of, I look even at my own family. I have an 11-year-old nephew. There's been a lot of challenges for him due to COVID, not been able to go to school or doing school from home, not been able to play a sport. If I look at myself, I've been working from home a lot, which is something that probably has benefits, but also has a lot of challenges associated. And then if you look maybe at our parents or our grandparents' generation, people who might have illnesses or underlying conditions, they've been very challenged. So it's an interesting question. And I think everyone has faced challenges, it's just in very different ways. For me, I would say working from home is something that for me, I didn't really, I found it makes it just a little bit more difficult to do your job effectively. And
is that from a concentration point of view? Is that from you can't tap into your colleagues? Is that from just a getting out of the house point of view? Because I know for me, one of the things was for the first couple of months, I was working from my apartment, and then there's an office that my father has, maybe a 15-minute walk. Now, albeit within the same village, that 15-minute walk to separate work from home was a game changer for me.
Yeah, I think it's very much, let's call it the qualitative things rather than there's no real good reason that you shouldn't be able to work at home, but it's nearly from an energy management perspective. I think it's probably safe enough to say, Rian, that both yourself and myself would be extroverts who we kind of get our energy from other people and from
Absolutely.
out. And that's probably the biggest challenge that I've found. And I know from speaking to friends and colleagues that it's something they've found difficult as well. So if you could kind of, if you could almost, if for this period gone by, if we could have been working from home but still doing all of our usual social or sporting activities, it might have been a lot easier. But when you have your social life and your extracurriculars, let's call them, taken away, and then on the other hand you're working from home, that just makes it very difficult.
During the working week for the last year and a half, there has been one person I've seen every single day during the working week and no one else, and that's my dad. I walk to work, I live by myself, I see my dad, I walk home from work for lunch, I walk back to work, I walk home again, and Monday to Friday, all I see, no one else. And gyms closed, any activities that I would do were closed. So as an extrovert, that's something that I've found extremely difficult because I thrive off that social environment and I get my energy from other people, which is interesting because I've been around introverts who would go to conferences and they would put a ton of effort in at conferences. And as soon as you've left the conference with them, you can see the energy completely disappear to them because they put so much effort in with that socializing, networking. Whereas for me, I'm almost pumped full of energy after it because I got my energy from people. So staying on that for a second, when you can travel again and when you decide to get on a plane, where is the first place that you're going to go to? If you could go anywhere.
Yeah, I think to be honest, I was meant to during COVID, during 2020, I was meant to go over to. I had a friend at the time who was working in Texas. We had a kind of a trip planned there, so I feel that's a box that I need to tick. Whether it'll be the first one or not, I don't know, but I think it'll be to the States somewhere. Whether it be New York or maybe the West Coast. Nothing. I'm wary of lining anything up, Rian, just yet until we have certainty on when we might be able to travel properly. But yeah, definitely go to the States.
Nice. Big fan of the States. It was the last country I was in actually before the whole world shutdown, March of last year. It looks like you're living in an apartment, but I don't know if you live with anyone. Pretend all your loved ones are safe, animals, people, anything. If that was burning down and you can only save one item from it, what one item would that be?
It's a good question, Rian, and I've heard you ask a lot of, if not all of your guests, this question, but it's something I've thought about, and where I've landed is just some old family photographs that were before the times of people having photographs on computers. Ultimately, everything else is replaceable, so that's the one I'd go for.
Solid answer. You can definitely tell you've heard me ask that question before because most people usually answer laptop or phone. So I'm proud that you didn't answer that. If in the future you were ever going to write a book, what do you think the title of the book would be called?
That's one I definitely haven't thought about. I think a lot of it would really depend on. Firstly, I'm not sure if I'd like to write a book. From what I believe is a serious amount of time and effort goes into it. But I think it would ultimately depend on, I'm still relatively early in my career in life, so it would really depend on how things would evolve between now and then. Certainly no intentions of writing a book in the coming decades.
Yeah, I know there's a lot of effort put into it. You're probably looking at it somewhere between 5 to 10,000, and majority of people don't make that money back off the investment, with time as well as a huge investment. And you reference you're still young and early. Who knows where you'll be in a decade from now? Could be something completely different. So final question is, I reference decade. I'd like you to imagine it's the year 2030. And you're looking back. So we're now talking in the year 2030 and you're looking back on the last decade. You can answer this personally or professionally, but what would you like to be looking back on?
Yeah, another great question. For me, Rian, it's quite simple in that I just like to be doing something that I feel is very meaningful and that I'm fully bought into. And a lot of it, a lot of the enjoyment I get out of day-to-day life, or achieving goals, is actually the process of just enjoying getting up every day and attacking, whether it's your role or your sport or something else in your personal life, and just feeling that you've given it everything that you could. So for me, if I was looking back, I'd like to feel that whatever I go on to do over the next 10 years, that I've given it my very best effort and I've enjoyed the process of doing it.
Solid answer. Tanner O'Connell, I have enjoyed spending the last 35, 40 minutes chatting to you. I wish you nothing but the best. I hope one day you do get to see Meath lift the Sam Maguire. But for now, thank you for being my guest today.
Thanks very much for having me on, Rian, and continued success with the podcast.